What's happening, traders? I hope you are good. I am back and actually in front of the screen this time. It feels pretty weird. I have been submerged in the world of supply and demand trading, really refining these zones and getting to understand the deception that takes place on a daily basis in order to actually find these zones, because the banks and institutions, they want you to zig while they zag. It's just simply a game of deception, and once you really crack that, another world begins to open up for you. But nonetheless, I have been getting a bunch of DMs via Instagram asking me how I get such pinpoint entries, how I basically refine larger time frame zones, which allows me to risk more, it allows me to raise my position size, but risk the same amount that I usually do. So for you, that may be 1%, 2%, 3%, 5%, or you may have a dollar amount that you stick to, whether that's £20, £50, £100, £500, and so forth. Doesn't matter. But in this particular video, I'm going to show you the two products that I'm working with right now, which is Pound USD and gold, basically the only two markets that I currently trade. And that's another video, I'll go into that as well. But I'm going to show you how I refine these particular zones in the 4-hour time frame and the daily time frame to risk such a small amount of pips, which allowed me to obviously raise my position size and keep it within my risk parameters. So let's get into this. What's happening, traders? Here we are on GU, and we're going to get into refining a supply and demand zone. So currently we are on the daily chart, and we have this daily zone here. And by the way, just to give you some insight, engulfing candles usually begin and end all trends, and this is the structure that I look for on every single time frame: bearish engulfing and bullish engulfing. Okay, this is it. This is my world right here. This is all I look for from the weekly, down to the 1 minute time frame. You can find this structure, and usually they begin and end trends. So let's just put this back to where it was. So this is our daily zone. Now, if we grab this price thing, let's go down to a smaller time frame actually, just to make it easier. This zone from top to bottom is 90 pips. Now, there's no way in hell that I want to risk 90 pips on this trade, right? So let's go over here a bit more. So we can't see that structure on the 4-hour time frame. Let's go down to the 2-hour. Oh, what's that right there? Boom. Let's zoom in. Okay, there's the structure, engulfing candle. Let's grab this here. Let's grab this here, and let's go back and see where the market went. Let's zoom in, 1 hour to perfection. That is all I do. It's as simple as that. I go down to a smaller time frame, mainly the 2-hour or 1 hour, because I usually execute on the 4-hour, but daily showed some signs of progress, so I decided to take it. And let's check out, let's check out this risk. So
I'm
17 pips. So I took a 90 pip risk down to 17 pips. So could you imagine what your position size could be then if you're not risking 88 pips? Even if you're doing it a pound a point for 88 pips, that's 88 quid. So imagine what you could raise your position size to just for 17 pips. Right? So this is exactly what I do when it comes to refining these particular zones, so I can get a much better position size and a pinpoint entry. And it is literally as simple as that. Just going down to a smaller time frame, depending upon whatever time frame you execute and define trend on, and then going from there. So that is GU. So here we are with gold, and we can see a 4-hour zone here, and we also have a 4-hour demand zone here and a 4-hour supply zone up here. Now, on this particular zone down here, as you can see, the entry is on point, right? On point. Again, we do exactly the same thing. We can see this is an engulfing candle, and the risk is, let's get the price. If I was to take this whole engulfing candle, 7 pips. All right. So let's go down to, let's half the time frame and see what we can find. Can you see the structure there? Let's just zoom in a bit. No engulfing there. That looks like that has that same structure. Let's go to a 1 hour. Let's zoom in. Perfect. We've got our structure right here. So I'm not worried about the wick in this case. The wick has already done its job on this area here. So I'm drawing my, which would be where my stop loss is, right here, and an entry right here. So you've got to remember, this zone is 7 pips in terms of the risk. This risk is now 3 pips. Yeah, so I've literally more than halved that particular risk, okay, by 50%. So a 3 pip risk, right? 3 pip risk I did on this trade. Yeah, but look at the fucking entry. Look at that. Look at that. I didn't even risk 3 pips. I risked 2 pips in this trade because I went as deep into the zone as I possibly could. Could it have missed it? Of course. And the trade wouldn't have been triggered. But I just decided to go as deep into the zone as possible and obviously get a really good price per point. And the market since then has gone up 27 pips. So I risked 2 pips to get 27 pips, and I've triggered another short up there coming to the downside, which is hedging my trade. Now, I have a target for this hedge at this area here, okay? Now, the reason why I have my target here is because a daily demand zone has been created out of this 4-hour demand zone. We have a drop, base, and a rally. Okay, so I now have another set of buy orders, or limit orders I should say. And again, we're going to do exactly the same thing. We're not going to trade this whole zone. We're going to go down to a 4-hour time frame now. And where is our structure? Right here. So I'm only risking this. This could all fail, by the way, right? So instead of risking 9 points to buy back into this trade, I am only risking 2 points, 2.6 pips, okay? And it's just this simple structure that I'm looking out for every single time, which allows me to get these pinpoint entries which you see when I post them. That is literally all I do. I'm just looking for this structure for within a larger time frame zone to refine. Sometimes it doesn't even have it, not on fucking any time frame that you go down to. So, you know, sometimes you're just gonna have to take that risk and just try the whole zone, or just forget about it, which I usually do, and just wait for something up that is a lot more solid. Okay, so that is how I refine my zones. It's very, very simple. And hedging is something that I've been recently doing because I thought to myself, all right, so if gold is actually going to the upside, right, going further to the upside, I may as well try and, you know, get a position down, get some profit while it's going down and going up. This is something that I've just been testing out recently, and it seems to be working pretty well. But if gold decides to push through all of these levels here, then I've at least made some profit on the way down, and I'm going to get Yes, I'll probably get stopped out of this particular trade, but I'll cover this loss if it does lose by gaining all of this on the way back down. Okay, which is fine with me, totally fine with me. And if the market decides to push through, fair enough, whatever, can't do anything about it. But if it decides to come down here, touch this level and then pop back up, you know, it's a brilliant trade. But this is how I refine my zones. I really do hope this has helped. If you have any questions regarding this tool, then please let me know in the comments. Please give it a thumbs up if you like the video, and I'll speak to you soon.